Good morning, good afternoon, and good evening to you over there. Welcome to today's weekly update. I will be touching on so many important things that we want you to see. And what is most important is most of the time for us to identify the structure that has played out and to understand when a trend is ending and a new one is beginning. It does not make any sense for you to trade at the end or towards the end of a trend because it can change abruptly. But at the same time, it's also very important for you to identify the end and the beginning of a new trend for you to maximize your gain. I'll be touching on so many things that I would want us to see the New Zealand USD, which is I want us also to see the USD JPY. All this why the Japanese yen has been falling crazy and has seen 34 years low. And it's as if the Bank of Japan, they are not doing anything. So I want you to see what I'm seeing in terms of the bigger picture of the market and what to expect and how to catch in on the opportunity that is going to present on USD JPY. Because which means I'm not going to stop at Eurodollar and gold. I'll be touching on those other instruments, NZD USD and USD JPY. Also, I'm going to touch on, for the Nigerian people, I'm going to touch on the USD Naira and the pound Naira and how, what you can do. Apart from, you don't have to trade the forex counterpart, but what you can do locally and how you can maximize, profit. I'm going to be releasing important details on those the two pairs. And now, for the first time, I'm going to go into the monthly here chart for us to see. I'm starting with the US dollar index. We are conversant and familiar with this structure. If I zoom out on this, we are seeing that this is a move to the downside. This is a corrective structure. And we believe that at least, if anything, we're going to see an 100% arm, an extension to the downside, at least minimum. And thereafter, if they want to, continue to turn it into an impulsive wave of 1, 2, 3, 4, 5, we will know, or it will stop at ABC. But like I do always tell us, let's confine ourselves. Let's be conservative and think of an ABC correction first. And if it's going to go past that. Now, we are saying that this is the end of a correction here. And we are told that this is an ABC, and which is an extended flag here. And we saw this as the first impulse to the downside. And these are done like a three-wave, which looks like a corrective wave to the upside, which we don't expect it to break this top. And that is what we've done so far. Now, if we look at the monthly, what does monthly time frame present to us? Let's quickly see. There's a couple of things I want to show us here very fast. So on the monthly, what we are saying in that is that we don't expect the price to take this spot. So as a matter of fact, where we expect that there's going to be a change of pattern here, we touched it on the monthly. So it's majorly here, but price didn't get to the place. Let's see, that place majorly. Price didn't get there, and we know that it won't break here. Price will not break this spot here. So I can use red for that, because I'm going to go back there. So on the monthly time frame, there are things we can see that this is like an evening start to send the price to the downside. This on the monthly has been very corrective, and an extended flat is here. Then this is the first impulse. We are seeing like a 1, 2, or A, B, and a C, and that we believe that we are at the end of this correction. Now let's turn to the weekly to see what mood we can get on the US dollar index. On the weekly, we can see the formation of the candle here. And after this candle had closed like this, we only have a few hours, like 2 hours for this candle to close. So what I see here is that this candle may be closing like this. And if it closes like this on US dollar index, we most likely won't be breaking the top again, because we might just have some correction, then the price will not continue to go bearish. So we are expecting like a U formation, like a this to close. Then we have, once this one closes maybe around this area, we may go up a bit, then send the price to the downside. So we are going to see what is going to happen on the lower time frame. But with what I'm seeing here, with this candle formation, it looks more like we're not going to break the top here. Now let's look at the DXY, what DXY is presenting. Looking at the DXY is going in a doji. So if DXY is going to go in the doji and close in a doji, with these, I see that the DXY most likely will correct to break the top one more time. And that is what I can see on the DXY. DXY will most likely break the top one more time. But on US dollar index, I can't see that from what I'm seeing on the weekly. If it's going to close, definitely a few hours, it's going to close like that. So this potentially can break the top, because by the time we look into the lower time frame structure, we'll see why this one most likely will still break the top, because it's going to end in a doji like this, and this is not enough to send the price to the downside. I think we are likely going to break the top one more time and send the price down. But on the monthly time frame, I need to compare all of that. I'm going to dwell more on euro dollar. Now, looking at this time frame now, so since we know that it's likely going to break the top one more time, this probably is not complete yet, almost complete. So this is an area that the price will not take. So that we know. Then the area that the price most likely will be rejected, it's around this area here, this confluence here. So we should watch for price. So I'm going to now use pitch on that in case we get there. So now, with that said, on the monthly, let's go to the, most of the time it's good to farabale, to, be patient, to wait for all this kind of thing to play out, whereby you are going to risk minimum pips in case it's not going to play out. Because all the liquidity has been grabbed as far as I'm concerned. So this is what we have here. And if you look at US dollar, euro dollar, looking at euro dollar, we are comparing the weekly time frame stuff. The chart on euro dollar. Okay, so euro dollar, it's kind of similar to that of US dollar. So, we have often thought that DXY and Eurodollar, they are opposite of each other, but they are the same, and inversely proportional. But now looking at here, the reaction we are seeing on the candle here looks more like that of US dollar index and not DXY. So what I can see here is that Euro dollar also is not likely going to break the bottom. So that's what I can see here. It's not likely going to break the bottom. So we're going to be looking inside of that to see what is going to present us. Now, let's go back to DXY. I need to show you something there. Because the structure of DXY, US dollar index and that of Euro dollar, looks more similar now than DXY. Remember I said that this is likely going to break the top one more time. So if you go to the daily time frame, you can see on the daily time frame, and this has explained the week, the long week. It's kind of a deeper bullish pull to the upside, and that is why, like I said, that doji is looking likely to going to break the top one more time. And if I bring out my drawing, so where is that going to be? So we said most likely we might be coming to this point to touch this area before we send the price to the downside. And where is the other red line? So the other red line now lies here. It lies here, and this is where, it's difficult at times to pick your point. It's actually below, slightly below here, but almost the red line is drawn above the price. So almost the same anyway. So if you look at it, we are going to be dealing with the low red line or the lower red line. So on what fib retracement is that pitch line to the move? If you take it down from here, so very close to 88. So very close to 88. I think we should expect that price we might break the top one more time and just bounce up or kiss the top and bounce back. So that is what we might be expecting. I think this pitch line, it's enough to send the price to the downside. We should be expecting reaction there. So that's what we can see on the DXY. Going to the internal architecture of that on a 1 hour time frame. On the 1 hour time frame, what we can see on the 1 hour time frame, since we began to pull down, let it load. Okay, we are concentrating here really. We can see that we've had this A, B, and a C, the last C, and in as much as we thought that we have done a wave 4 here, so where this is different from others is that this is wave 3, and this is a wave 4, and wave 4 probably looked like an A, B, and a C of wave 4. This might be running like a 5 waves to the upside to finish up the wave 5. So that is what I can see here, looking at DXY. So DXY looks most likely, yeah, it has broken this top now, because this is a liquidity area that's broken this top here. It means that it's going to go up. It's going to go up. It has reacted just before this point. So it's going to go up, and it's quite impulsive. So we might be having a correction, a 1, 2, 3, 4, 5 to finish up slightly above here or kissing this area before we see the reaction to the downside. That's what I can see here. If you compare that with US dollar index, let's see. US dollar index may not, because this is like a 192. Let's see. I need to show you that. So after this move, there is a low now. So this new low, there is a break of this trend resistance here. So we are in a new wave. It could be a correction. It could be a correction. This may be giving us like a 1 and a 2, like a 3. We need to see this correction, but this does not look like it's going to break the top. If you compare this with your, it's going to take this area. This might actually be a wave 1 because this looks like a 4 and this looks like a 5 here. This looks like a 4 and this looks like a 5 here. So you can see the difference. Though this man now looks like the first impulse of a 1 and a 2, a 3, a 4, and a 5 to the downside here. So we might be seeing this going up as a correction to this wave, which is the first wave. And we know that most of the time, the first wave, which is the beginning of a change of a trend, usually looks very corrective. So you might not be able to decipher between that first wave and, a correction. So that is what this one is, looking like. Unlike DXY, that actually has raised quite, to the top, this might be breaking the top. So let's look at euro dollar. So that's where I'm going to talk more. I'm going to dissect euro dollar the more. USD. Now, we are trying to look at structure. We are trying to look at what it's giving us and what to expect. Because for me, I think these had completed like a 5-way structure to the downside, a 1, 2, and a 3, a 4, and a 5 here. And I believe so, that within this wave itself has done a 5 waves, and this is seen as a wave 4 major, and this is a truncated 5. That is what I can see here, because also this one came down in a 5 waves. And these might just be the beginning of a new wave. So that is what I can see in here. So we are beginning to see this as a possible broccoli. Now, the way we are going to align ourselves, we know whatever happens here, either we don't break the top, the bottom or not, we are still going to go bullish. So what is most possible here, the highest probability, maybe about 70 to 90% probability, is that we are not going to take the bottom. That is what I can see with the formation here. We are not going to break the bottom, but if you're going to break the bottom, it's just 10% likely that is going to happen. And if we break the bottom, then it means that immediately we break the bottom, we are looking for a reaction to go long again, to buy. But what I can see here is that this is a 5 of these 3 below here, and this is a 4, and this is a truncated 5. So now when we now turn to the bits of the minimum broccoli now, we can see that this is like a wave 1, ABC of a wave 2. So we can say this is 1 and a 2, and we can now begin to see the internal architecture of a wave 3, because by the time you look at the extension between 1 and 2 here, it fits perfectly that this one had broken within the wave 3 itself, because this is a 2 and this is 1 of a 3, 2 of a 3. So by the time you connect 1 and 2 of a 3, you'll find out that this is working at a 3. of a 3. So, which is good for a 161.8 extension here. So we see this as a 1. Let me bring out the drawing so that you understand what I'm trying to say. Let me go on a 15 minutes time frame. So going on a 15 minutes time frame, what I can see here is that we have done a 4 and a truncated 5 here, even though with 3 had pulled lower here. So a 4 over 3, a 3 over 3, a major 4, and a truncated 5. And we are seeing a lifting here. So the lifting here, we have a 1 in that degree, yellow degree, and a 2. Then we said with 3, a 1 over 3, a 2 over 3, and this is a 3 over 3, a 4, and a 5 over 3 to complete with 3 in itself. Like now, we now see a major with 4. Then we can see a 3 of 4 here. So 3 in the red, the 3 in the yellow. So by the time you connect the extension here of the yellow fits finally as 161.8 here. The extension of the red 1, 2 fits 161.8 here, maybe at this point here. Then we see a 5 of these actually is supposed to be like this, a 3 and a 5 of this red. And after a 5 of this red completes this, then we now have probably a major 4 and a 5 of yellow, because this would be like a 3 of this 3 here, and the 4 and a 5 of this yellow to make it a 3. So a 3 in that space. So we can even say that this looks like the 4, the AB or the ABC of that 4, and we have the last wave of 5. So if you do 161.8 here, this one agrees with 161.8 extension of yellow and a wave 5. So we are finished 1, 2, 3, 4, 5 for us. Then breaking this low of 4, it looks like we're going to see an ABC correction that we have just finished. The first move to the downside here as an A, we may be going up as a B. We see how far, how deep, or how, upper we travel. We need to see the movement down, the correction, and still go a bit up. Then once the price is turning down to the downside, you just look for at least an 100% extension to the downside to catch, your buy. So, but most of the time, I think this is going to pull beyond 161.8 because 61.8. This is 161.3. This one is 78. I think at this area we might be seeing reaction between this area and this area. We might be seeing the reaction to go long again. So, like I said, I don't see Eurodollar breaking the top, and if he broke the bottom, if he broke the bottom, look for your buy again. So for anyone that wants to seriously consider buying this, you have not actually lost anything, is to look at this and look for the most probable area is around this area, between this area, 6440 and 6441 and 6410. This area might just pull the price, or the price might come to this area, as a support here and a support here. Price may be coming here, but it now depends on after this correction finishes, the B wave corrects finishes, and we broke the bottom again. That's when you can probably connect and look for your coordinates to buy. And if this one travels more like in an impulsive manner to the downside, and you may be probably looking at, okay, is it going to do a 5-way to the downside? If it's the 5-way structure, also it might get truncated as a wave 5 to go up. But what is popular now is an ABC correction to the downside. That is what is popular. So anyhow, we are still going to to the upside to break the top. Now, having said that, the other one we want to look at now quickly is Nzd USD. Nzd USD. Nzd USD. What are we looking at? In Nzd USD, we are looking at a possible correction also. This might be giving us an ABC correction. The bigger picture of Nzd USD, for you to really understand what is happening here, the big picture. So this is the big picture here. We are seeing that this wave had finished itself to the downside here, and we are probably having a bounce to the upside. So this, it's more of a correction. This is the first wave of A, and this is the first wave of a B. Probably we are going to be seeing a C later. It might also be like, yeah, it might be a flat at the end of the day, because this might just be almost at the same low, but we might be having a flat at the end of the day. But we are going to concentrate more here. We are going to concentrate more here because this is the first real intention, real movement to the upside, and we are correcting now after this push. After this push, we are correcting. So this for me looks like an A, and this is like a B, and we want to have a C, which is at least almost equal to 100 extension to the upside. So we don't want to see price break this low now. So if we have done an A here and a B here, we are looking at a C that is going to be in 5 waves, 5 motive waves to the upside. That is what you expect of a wave C. So, and in that case, we are looking at this as a possible what, a 1 and a 2. So, and at least first thing we're going to do is to look for a 161.8 extension to the upside for us to get a wave 3 of that C, then a 4 and a 5 for us to turn down. So that is what we are looking at. That's a big picture now. That's the big picture. So if I go to the weekly time frame on Nzd USD, you are at a point where you can actually take advantage of this market. So this is what we have again. And this is the first wave A. Looks like a 1-2 here, a 4 and a 5 to finish this. And we have a B wave, which is this is the B wave, and the B wave had gone down in 3 waves format, an A, B, and a C. So that is where a C has ended. Now, if a C has ended here, now we are starting the major C to the upside. Oh, sorry, yeah, of C of a B now, because this is an A major of a B wave, A of a B, B of a B, and a C of a B. Then we're now going to do a C major to the upside. Now, doing a C major to the upside, this is the first impulse, which is 5-wave structure to the upside, which has completed itself as a 5-wave structure to the upside. Then we are seeing this as also a 3-wave to the downside for a B or a 2, as an A, B, C of a 2, and we most likely will be going up. Again, with the wave this candle is, I don't see price also breaking the bottom once again. So with the way the candle is, I don't see price breaking the bottom. It's going to close like this, and the price may correct a bit down before the movement to the upside. So with that said, on that time frame, I'll be bringing out my drawing. So I'm bringing out my drawing. This is where the C of A had ended. So look at the drawings again. That's a B major here. So this is the A that I talked about the other time, the A and the B. Now we are now inside the C. We have done the first 5 waves to the upside of a 1 with 1, an A yellow, B, and a C of yellow of wave 2 of that big C. So I just want to align your thoughts to where exactly we are, and price it's going up gradually again. We had reacted within where we think we should react for us to move to the upside. Now, like, I don't expect price to take the bottom again, but what I can see here now is we may be having, these had completed, this may be just be a wave 1. We may be having an ABC correction to the downside, for us to trust further to the upside. And if you're going to do that, that trusting further to the upside will be seen at least minimum to break this top, and we'll see what happens thereafter. So wait on these. Let's this correct. Let's this finish this correction to the downside. It's going to take this bottom, break bottom, and come near this zone. If you are not in, you can begin to look for your buys around this area. So look for your ABC correction to the downside, and boom, go up with it. That's on Nzdusd USD. So let's go to gold. On gold, so much to talk to touch tonight on gold. So what do we see on gold? Now we have seen the first reaction to the downside and ABC to the upside to have finished this correction. Just hold on a bit. There's a power loss, so I had to quickly look at that. So we have seen this as an A in a B, ABC of a B, and this is going down as a C wave. This is going down as a C wave. With this as a C wave, if we're going to have a more bigger correction that will make this triad 1, 2, 3 and as an A, then we should be looking at this price not taking this point. Once the price takes this point, then how do we know? Let's see. Because you have to know how to map out the area of liquidity on a higher time frame for you to work out your lower time frame. So on the daily, so this is where we have seen reaction. So price must not take this top. Once the price violates that top, the price is going up again. So we are done. So, and in an attempt to look for opportunity to short and to sell, we should, since we are seeing a corrective format here for now, let's allow this to come up a bit and see the way we see an A and a B format here to have a C leg. And once you're in a C leg, you will know that the C leg will go up in a 5-way format, and that around this area is where you should be looking for yourself. 2393, 100 is where you should be looking for yourself. And if that is going to come, then you should now be looking for an A B around this area, and equal leg C before we go up. Of course, price may go up from here and break the top. This may be enough for correction, like an ABC, it may be enough correction. And the way other instruments are setting up, DXY may lose it anytime. So if that happens, this may just end the correction here and it will be going up. But if you're going to have one more leg down at the periphery here, look at whatever you are getting here to know if you're going to sell. So ultimately, if we still get one more leg to the downside, then we're going to now confidently look for our buy. Otherwise, this may just continue to spring to the upside. But this is the area of liquidity. Once you break this area to the upside, then you are going up. Now, going on a lower time frame, let's say 1 hour time frame, to look at that. Now, on 1 hour time frame to look at that. So let's bring out our drawing. Bringing out our drawing because we might be getting a bigger, this might just be a 1 and a 2, ABC, and this Y here, we may just get WXY, then X, another WXY to the downside, or ABC. So we call it a double correction. It might just be a double correction that we're going to get. We don't know for sure, but this is the area that I said of once we break this area, price is going to go up. Not even this one. This area, price is going to go up. Once we break that area, around this area, so price is going to go up. So we should be looking at the possibility of, what kind of correction, because this is the last wave now. What kind of correction are we going to get here to the upside? So at about 76, 78, or whatever it is that we're going to get, this is like an A, this is like a B here. So this going up, a 161.8 might be around this area. So anything that we get a reaction within this area of liquidity, we should be looking for us to sell and come down. So if we're going to get that. So that's what I can say on gold for now. The possibility of us still coming to the downside. If we break up, then let's allow for a big correction to the downside for us to move up. If we break above here. Now, let's look at yen. In trying to look at yen, I'm going to look at the JXY. Let's look at the JXY. The JXY, and let's look at the weekly chart of JXY. Because that's one thing that I actually had to take time to study. The way everything is just flying like a knife to the downside. And what caught my attention, let me go and see if I can give us the monthly. Yeah, let's look at the monthly. Now, what caught my attention here on JXY, it's this. And I can see that this is like a 3-wave. Unfortunately, we can't see what is here. I can see this as a 3-wave, an A, and a B, and the C. So if we had seen this as an A, B, and a C, so we're going to focus more on this new wave to the downside. So this move to the downside is seen as a first impulse to the downside of this C. So this is an A, B, and a C, maybe an 100 extension to the downside. But what would give us, what is near perfect entry, is to look at what this wave is doing here. So we see this as a wave 1, because if it's a C wave, this also looks like a 5-wave, so probably a zigzag to the downside, or not, like a 1, 2, maybe 3, maybe like maybe a 3 and a 4, sorry, a 3, a 4, and a 5 came down like a 1, 2, 3, 4, 5. So this is like an extended wave to the downside. So we might have this one truncated. So that's one thing that is funny here. So we might have a truncation here. So but what is safe for us to look at for now is seeing this as an A and a B and a C. So within this C wave, we are seeing this as a wave 1 and a correction of 2. So the 2 stops here and it's stalled here. And now the last wave is a 5 wave to the downside. So I believe that in looking at this last wave to the downside. So this is the height of wave 2, a 1 of 5 of the last 5, which is C. Sorry, a 1, a 2. Now, after 2 of wave 3, 1 and 2 of wave 3, a 3 of the 3, this is a 4 of a 3. And if this is a 4 of a 3, we are seeing the very last wave to the downside. We are seeing the very last wave of to the downside. So where are we in this wave? Let's go to the weekly time frame. I want you to see something. So looking at this weekly time frame now, we are going to measure on the last part, which is the wave C. So, and like we said, that this is a 1 of C in wave 1, A, B, C of a 2, A, B, and a C of that wave 2, and this clicks at about 78 to the upside of this impulsive wave, which is a wave 1 and a wave 2. Then the last wave 3, this is a 1 and a 2 of 3, also about 78. Then we have a 3 of 3, 4 of 3, and a 5 of 3 here. So this has finished with 3. Of course, the extension here, 1 and a 2 to the downside here, is more than 161.8, which agrees with that fifth extension. And now this is seen as a wave 2. I'm sorry, a wave 4. And it fits perfectly for a wave 4 by the time you connect. You are going to do that yourself. Let me bring out the drawing so that I don't waste my time. Now, this is what I've said now. I've said this is a wave 1, and this is a wave 2, and that is a wave 3. You can see it, wave 3. The reaction here from wave 2, 3 to 4 is exactly at 0.38. That is the reaction I got at exactly 0.38. Now, because that is a 0.38, then what again we need to do is to look at this one, where is 61.8 to the downside, or 1. What do you call it? 1.27, because most of the time the extension to the downside of this particular wave, 3 to 4 to give us 5, might just be within 1 to 5, 1 to 6, 1 to 7. So if we do that from 3 to 4, two to 4, so we can see that 1 to 7 is falling here. So this is a potential place where we might be seeing reaction. Price is almost there. And if we are going to do anything, of course, we don't expect price to break below 161.8. So with this said, we are going to use that as a tool to map where most likely this is going to change its gear. So we know that this is a wave 4 and this is a wave 5. So we're not going to be looking at this wave 5. Let me remind you, this is weekly chart in front of us. So it's a big thing. So this wave 5 now, we are seeing it is formation of ending diagonal already between this wave 4 to the downside as a 5. So seeing that within this wave itself, this is a 1 and a 2, perfectly at 78. And a wave 3, we can see, and a wave 4 exactly perfectly at 338 or 0.38 between 2, 3, and 5. So here, then if you now look for a 161.8, because at times for here, a 127 is here, a 161.8 is below. But for this internal structure here, which is giving me this, and this looks more strong, and most likely things that's going to happen, for us to have a 1 and a 2, a 3, a 4 here, between this point and this point, the 161.8 of this particular wave tallies with 127 of this. The extension of this to the downside of 127 tallies with 161.8 here. So the two coordinates are fitted on themselves. And that is the logic here. The two coordinates are fitted on themselves, so I'm expecting reaction here. I'm expecting a reaction here, a strong reaction here. And this is where I think we might be seeing a reaction to the upside. It might break slightly low, but this is a very strong area that I expect reaction. So we most likely are on our last movement to the downside of this particular wave, because this is a 1 and a 2 of 5, a 3 of 5, a 4 of 5 done. And within that 5, we are now seeing a 1, 2, 3, 4 of the last 5. So that is what I can see here. Now, with that said, if I go to the 4-hour time frame to look at this area, 4-hour time frame now, we are trimming down to this area. Once we break this trend resistance, we know that we are going up. So you can see that the price is almost where we are expecting that reaction to take place. I'm taking my time here to help us see something. So, like I said, it's a big wave. So you can see that it has turned out to be a big wave. And it's the 1 and the 2 reaction, and the 3 and the 4, we can see that clearly in front of us. Then we are seeing that this is like a 1 and a 2 here, a 1, A, B, C of a 2. So this is a wave 3. What we first need when we see a reaction here is at least a wave 4 of this particular move. So we are seeing a wave 1, A, B, C of a wave 2. This is a wave 2, and this is a wave 3. We still need a reaction. When we see that reaction, we know we are at the end. So once we see that reaction to the upside, we know it's wave 4. All we need to do is to go to a wave 5 and catch from there to buy in time, you know, when we are talking of a JXY. So we might be finished a wave 3 around this area, and that might be the low. So for us to have a push up of 5 and a truncated 5 possibly, but whatever it's going to be, we'll see. But we still need the last correction before the last dip before we go up. So that is what I can say here. We are very close to where yen is going to react violently to the upside. So with that said, let's now use that information. Let's pass it across to USD JPY, which is dollar yen. Let's go to the weekly and look at dollar yen. It's a long update today, but it's what it's. So dollar yen now. So it's going to be an inverse. So with that said, we know what this is. This is a B wave, okay? And this is our first wave. Sorry, this is a B wave, and this is a A wave, and this is a B wave. And this is, we didn't see this on the JXY. I think we started from here, A, B, and a C. So the C part is what we are dealing with. So this is a wave 1, and a wave 2, a wave 3, a wave 4, just like we did a 1, 2, 3, or 161.8, we know where it's going to be. If we bring out our drawing, so we know that this is a 1, and this is a 2 here, and this is a 3, this is a 4. And at this point, 3 to 4, 1 to 7 is going to be here. And 161.8 of that 3 to 4, we know that it's not going to go past here. That's what we know now. But again, switching to this particular last wave, of 5. To look at the internal structure of that with 5, let's look at our 4-hour time frame. Now, switching there, so we now know this is 3 and this is 4. A 161.8 of 3 to 4 falls around this area. So you can begin to look for your your sell around 159. So 159.00 will be a good area to look for your sell. About 159.00, it may just pierce it a bit. So if you don't get reaction, price is very close. So price is very close. This is like a wave 3. So what do we expect from a wave 3 of 3? Because this is a wave 1 and a wave 2. And here we have a 1, 2 of that wave 3, a very big wave that will break these. Because once you connect 2 and here is going to go, then you take it here. This one breaking it has shown clearly that this is a wave 3 and it's going to end soon. So we are going to see a reaction to have a correction, and the correction might take some time here, might waste more time here for us. But once we have that correction, we know that we are very close to where we see Jesus. So that we might be seeing reaction around this area. It's an area you can take a small, bet here and see if it's not going to drag you too much into the negative before we see that reaction to the downside. I'm seeing this possibility of a reaction here for us to have a 4, and after a 4, a 5, which once you recognize that 5 go to the upside, then boom, it's going to be a very explosive move and a rocket move to the downside. Once it breaks this, then you know that this is the end diagonal is gone and we are going in a flash to the downside. So with that, I've come to the end of USDJPY. Now, for Naira, let me quickly show us what I expect us to begin to how to engage ourselves. On dollar Naira, I did a special video to align our thoughts. Let me take it on a daily. So I'm not going to go to the lower time frame of this at all. On a daily, I did, if you look at what I said on that daily, that video, I'm just going to align your thought now. So let me bring out the drawing. So we have gone past all some corrections here, and we are seeing an ABC down to the downside as a first move. We are broken out of a trend resistance here. All you need to do is to track this. Once we have a break to the downside, that means we are going for the third leg of a C, and we'll know where it's going to go to. So what do I expect? I expect that this going to the upside, because I expect that reaction to occur here, and now we are seeing that reaction, it's going to go up. We should be seeing reactions around this area without breaking this top at all. There is a liquidity area. Around this area, we should be seeing reaction. So once we see that reaction to the downside around 1,550, I don't think we're going to break. Dollar is not going to go beyond 1,550. Between 1,450 and 1,550, we should be seeing reaction to the downside again. And so when you are seeing that reaction to the downside, you wait until it breaks. You can calculate when it's going to lose its steam here. And this is an area, once we get, I don't know for now, not until we begin to come down again. So what I want you to do, these took like a 6 weeks, a month and a half for us to have these. And these may be going up more like a sharp wave. But we need to still come down a bit, correct, and go up, the last time before we sell again. If we break above here, that will spell doom for Naira. If we break above here for now, that will spell doom for Naira. That will be a very terrible case. But if we go up and correct one more time, then you know what you can work with. So around this area, if we break down and correct after this upward movement to the downside, look to whatever Naira that you have with you. buy dollar. Whatever naira we have saved, instead of just keeping money in saving money in any account, I will advise that your money, once we break the bottom again, look to buy enough dollar that you can buy, because when the dollar will now begin to go up, the price may be as very close to double, if not 150% to 200%, amount of what it's going to worth once it moves up. So because it might just be going up from 1,000 to like 2,500. If that happens, that's a big one, before, if anything, we're going to see the dollar begin to come down again. So at that point, at the height of you having your dollar, your money in dollar appreciating, then you cannot begin to sell to get your naira. I believe you get what I'm trying to say. I will be, if you are interested, if you want an update, I will be, if you request for it, I will be telling you, I'm giving you the update. So on pound, it's still the same scenario. On pound, some people were saying, no, God forbid. I said, God forbid, care. This is reality. On pound, I say, okay, it's like they are doing one magic. What magic? This is mood of the market globally. What is CBN doing? Nothing. So again, we are out of this trend support, and this correction is going up now. I think it's going to go up, correct, more to the downside, go up. We should be expecting reaction on a pound between 1,800 and 1,950. So we don't want to break above here. If we break above here with this move, then it spells doom for naira. So these are strong movement to the downside, and this is where weakness came in to the naira, and we saw that, okay, very soon it's going to bounce up, and it's bouncing up now, going up weekly to the upside. To the upside, we are going to have more. This B leg is also going to go down weekly. Then the last leg of C may look like something like this, that will look strong, like an impulse. And at that point, again, the pound is going to lose it. We're going to look for where pound is going to come down, break the bottom. Probably pounds might be walking down close to 1,000, or around 1,300 or 1,100 or anything, whatever it is. At that point, if you want to buy pounds with your naira, buy enough pounds, because pounds is going to go like a double, if not triple, once it breaks this top. And with that, I've come to the end of today's update. Do like it, share it, comment if you like what I've done. It's been a long one, but I think it's worth it to dissect those structures and commodities. And sorry, I said commodity. Yeah, one commodity and the instruments that we have. So see you during the week. Bye.